Big news for Draftkings Stock. What is going on, guys? Welcome into this video today. As you can tell by the title of this video, as you can tell by the way I'm talking already, this is going to be another stock news video where I'm going to go through an article of an analyst wrote. I'm going to break it down, give my 2 cents on it, and go over if I agree with it or not. If you want to learn more about Draftkings Stock, if you don't really know too much about it, I do have a full in-depth video on that. I'll link that below in the description if you guys want to go check that out and watch that first. Then maybe check out this video. That might help you a little bit better if you're not familiar with the company. But here I really just want to go through this article, and again, this is just to show, like, I don't agree with necessarily everything that analysts have to say, and a lot of analysts don't know what they're talking about, and a lot of things you might read in these articles really don't apply and should not affect your decision as an investor. But anyway, if you guys do get some value out of this, if you do enjoy these videos, if you do like making these videos, please hit that thumbs up button. That really does help me out in a massive way, and also shows me that you guys enjoy these videos and I can keep putting more of them out. And if you guys don't enjoy these videos, then I will put up different content that you guys enjoy. Also, if this is your first time, welcome. Please subscribe to the channel if you want to see more content like this. Love to have you here. Love to turn on that notification bell so you can see more videos and don't miss any uploads, just in case. And let's get to it, guys. Let's get right into this article. The title of this article is Draftkings Stock Surges After Cathie Wood's ARK Invest Buys Draftkings Shares. Is it a buy right now? Now, guys, let me put it this way. So I really have nothing against Cathie Wood. I think she's very smart. I think she's one of the smarter women, one of the smarter people in this industry. But look at it this way. So Draftkings is going up in value. The valuation is going up because someone came out and said they like this stock, so other people are going out and buying that stock. That is the stupidest reason ever that a stock price could go up. It's stupid because people are flooding into this stock to buy it because someone they know or someone they respect, someone they look up to is buying it. It's completely ludicrous that people are throwing all their hard-earned money into a stock like this just because someone they know is buying it, someone they trust is buying it, a really famous, a really smart investor is buying it. It's really stupid. So if you guys are out there and you're reading this article, which obviously if you're watching this video, you are going to read this article because I'm about to read it and go through it, never ever make an investment decision on what anyone else says. Never. Always do your own research, always do your own due diligence, and that's going to honestly make you a much better investor. I promise you that, guys. As sports betting legalization spreads across the United States, DraftKings is at the forefront of the online betting industry. Amid a huge move since its April 2020 debut, is Draftkings stock a buy? This is what I've been talking about, and this is what I talked about in my bullish thesis about DraftKings in that video that I mentioned at the beginning of this video. Honestly, I think DraftKings is going to be the leader in this field. I see a lot of great things from this company, but mainly this branding is completely A1. I compare it to like Beyond Meat. Like, they have more competitors. It's a huge space they're in, but the branding is so far ahead of everything else. It's ridiculous. Some people, and I have a friend that actually mentioned to me that he said, what about Penn National Gaming? Honestly, I like Penn National Gaming, but they just don't have the branding from what I've seen to keep up with DraftKings, in my personal opinion. Every time I watch SportsCenter, some sort of game, I listen to a podcast, I always see advertisements for DraftKings. I never see advertisements for Penn National Gaming, ever. So if you guys see those, like, let me know when you're seeing them, because I'm honestly not seeing them. And I watch a good amount of sports. All my free time basically goes to looking into stocks, making YouTube videos, and sports. That's really where my 3 main points of my free time go. And I really don't see anything about Penn National Gaming. So if you guys do see that, please let me know in the comments where you're seeing it, because I'd like to check it out. The expanding legalization of digital sports betting is an emerging trend. The November election results showed voters in several states largely approved ballot measures that legalize sports betting and other game expansion measures. Like I said before, guys, like I said in that video, it's only a matter of time before sports betting is legalized throughout the entire United States. It's only a matter of time. Boston, Mass headquartered DraftKings is primed to take advantage of this burgeoning shift in state attitudes towards sports betting. DraftKings is an online sports platform that allows users to play daily fantasy games and win cash prizes. DraftKings is on the road to profitability. After losing $3.26 a share in 2019, analysts expect the company to lose $1.91 in 2020 and $1.22 per share in 2021, according to IBD data. So they are moving towards profitability pretty quickly, and they're really ramping it up. And I actually think it's sooner than a lot of people might think. I think 2022 is going to be a little ambitious for them to be profitable, but 2023 or 2024, I find that completely realistic. 2024 especially, I find very realistic and very achievable for this company to become profitable. DraftKings stock fundamental analysis, strong revenue growth. On the revenue side, DraftKings saw a 98% year-over-year surge to $132.8 million in the latest quarter, reported on November 13th. In the quarter, the company raised its full-year 2020 revenue range to $540 million to $560 million, which equates to 25% to 30% annual revenue growth. DraftKings also introduced 2021 revenue guidance of $750 million to $850 million, which equates to 45% year-over-year growth using the midpoints. 45% year-over-year growth. Guys, this company is growing and it is growing fast. They are doing fantastic things. I personally think they're ahead of schedule. You're seeing this company do things that is just fantastic all around. Like I mentioned, the branding, they're literally everywhere. Love that. On top of that, they're already in Michigan. And as I mentioned in my DraftKings analysis video and my bullish thesis around that, was Michigan makes up a pretty significant portion of the United States population. So the fact that they're already in Michigan and online sports gaming is already up and running, fantastic. I love what's going on here. I love it. I love it. I love it. The resumption of major sports such as the NBA, MLB, and the NHL in the third quarter, as well as the start of the NFL season, generated tremendous customer engagement, said CEO Jason Robbins in a news release. In addition to our year-over-year pro forma revenue growth of 42%, DraftKings recorded an increase in monthly unique payers of 64% to over 1 million, demonstrating the effectiveness of our data-driven sales and marketing approach. Honestly, I think DraftKings is in a pretty bad situation. Now they've kind of spun it and they've turned it into a pretty big positive. Obviously, when sports are shut down, that's not good because that's their business. Sports are really revolve around their business, obviously, if you know anything about DraftKings at all. But now, look at it this way. When things were shut down, people couldn't go anywhere. People weren't spending money because nothing was open. Now, things still, they're kind of open, but it's not like the real normal that we're all used to, that we all know and love, and we all want the world to get back to. It's still like the new normal per se. So what happened when things were shut down and now that we're in the new normal? Well, people couldn't go anywhere and they couldn't spend any money. So what are people doing with that money that's burning a hole in their pocket that they feel like they need to spend on something? Some people are spending it and they're throwing it in the stock market, which isn't a bad idea, but that's why the market's so pumped up right now, because people don't have anything to do and they just threw money in the market. But another thing now that sports are back, some people are just throwing money down in the game because they're like, well, I really don't have anything to do. I've got nothing to do on a Friday night. Let me just throw down, $50 on the Celtics. I'll have a couple beers with myself because you really can't see too many people these days. But I'll have a couple beers and I'll just make the game fun. A lot of people are doing that, and that's really helping DraftKings in this situation. DraftKings IBD stock ratings. As a result of the company's lack of profitability, DraftKings EPS rating is a weak 26 out of a possible 99. The EPS rating measures a company's ability to grow profits year over year using the most recent 2 quarters and the past 3 to 5 years of earnings growth. According to the IBD stock checkup, DraftKings shows a mild 78 out of a perfect 99 IBD composite rating. The composite rating helps investors easily measure a stock's fundamental and technical metrics. Okay, so I can see why the EPS rating is bad. Obviously, because they're not profitable. Like he said in the article, that's going to put a damper on it. But at the same time, the composite rating, this company has great fundamentals. They're in a growing industry. Jason Robbins knows what he's doing as the CEO. I like it. I like it. I can overlook the profitability thing, but I like where this is going. I really like the fundamentals. And as they get closer and closer to profitability, this company is going to grow even more, guys, even more. DraftKings stock news. On September 2nd, DraftKings announced NBA legend Michael Jordan would join the company's board of directors as a special advisor. On September 14th, DraftKings entered into a multi-year agreement with Disney, ESPN, to become a co-exclusive sportsbook link-out provider and exclusive daily fantasy sports provider of the media giant. On January 5th, New York Governor Andrew, I suck at names, Cumin, whatever it is, announced legislation to allow mobile sports gambling in the state. New York has the potential to be the largest sports wagering market in the United States, and by legalizing online sports betting, we aim to keep millions of dollars in revenue here at home, which will only strengthen our ability to rebuild from the COVID-19 crisis, Cuomo said in a statement. On January 22nd, Michigan launched online sports betting and casino games. On January 24th, DraftKings announced the launch of DraftKings Sportsbook in Virginia, marking the 12th state in which DraftKings is available. So guys, this news I just read, and some of this stuff I did talk about in my DraftKings video, this is huge for the company. Obviously, Michael Jordan, huge in itself. He's literally a walking businessman. He's walking advertisement. Obviously, you can make your own opinions about how he's running the Hornets right now. That's a topic for a different conversation. But if you ask someone who doesn't follow sports or doesn't even follow basketball, knows nothing about basketball, knows nothing about sports, if you said name one athlete, they're probably going to say Michael Jordan. If you said name one basketball player ever, they're probably going to say Michael Jordan. That's huge for this company. Even if he doesn't do anything, just having him on the board of directors, just having him in your corner is huge. It's absolutely, absolutely huge. In addition to that, Disney, obviously that's also huge because, you got ESPN over there, the worldwide sports. It's huge, guys. That's more branding. It just pushes them to the brink of greatness. I love these two things right here. In addition to that, New York, that speaks for itself. You can make it there. You can make it anywhere. I don't even need to go into too much detail right there. It can be the largest place, the largest sports gambling platform for this company. Also huge. In addition to that, Michigan, we already touched upon that, how big of the United States population that is. And Virginia is becoming the 12th state. that DraftKings is in, the 12th state. And guys, I'm telling you, it's only a matter of time before you see 15, 20, 25. More states are going to be legalizing this. DraftKings is just going to be getting into more states. On January 26th, DraftKings surged over 5% after Goldman Sachs upgraded DraftKings stock from neutral to buy, while raising the price target from 45 to 65. Meanwhile, Bernstein started coverage with an outperform rating and a 71 price target. I agree, like I talked about in that DraftKings video, we could definitely see this price target in 2021, especially in 2022. According to Goldman analyst Stephen Gramling, we upgraded DraftKings to a buy as we expect ongoing sales beat versus consensus driven by sustained market leading position in new and existing markets, ability to participate in the economics of single operator states, and presence of national partnerships that should allow them to accelerate growth and achieve scale sooner than the broader peer group. All those things I agree with right there, I really think that's actually fantastic. I agree with the sustained market leading position. I feel like they're going to be able to get into more new markets and just grow in existing markets. I feel like they're going to be the leader in all of these states. And on top of that, I feel like with this growing industry, and as DraftKings continue to grow, you're going to see more sponsorships, you're going to see more deals coming in, which is only obviously going to help the company grow revenues, top line, bottom line, the whole 9 yards. DraftKings stock technical analysis. On April 24th last year, DraftKings stock broke out above a 1960 buy point in a cup base. Shares advanced as much as 128% from the buy point before the formation of the next base. After a 38% decline, the stock formed the right side of a cup base featuring a 44.89 buy point. DraftKings broke out on September 14th and quickly rose as much as 43%, but the stock couldn't afford its lofty gains and they dissipated over the next few weeks. Now DraftKings stock is trying to break out past 56.08, which I believe it did. I think it did today actually. I'm not sure off the top of my head, but I think it did. Buy point in a cup with handle according to IBD MarketSmith chart analysis. Meanwhile, another handle entry looms at 56.87. A potential flaw in the stock's relative strength line, the RS line remains far from its old highs as the stock is trying to break out past the new buy point. Ideally, the RS line should hit a new high on the breakout day or shortly thereafter to confirm the stock as a potential leader. So you're telling me that the industry this stock is in does not matter, that the industry that this company is in does not matter. You're telling me that the potential growth that this company is projected to see does not matter. The CEO does not matter. The fact that they're getting in more states, the fact that they have Michael Jordan, the fact that they have a partnership with Disney, it does not matter because of a chart. Because of a chart. Tell me how the fundamentals do not outweigh the technical analysis here. Tell me why technical analysis is important. Anyway, I digress. Is DraftKings stock a buy right now? DraftKings stock is a promising long-term perspective in the sports betting industry and the company potential is encouraging. Despite a lack of earnings, the company has huge revenue growth and is one of the leaders in the online sports betting megatrend. Shares opened Tuesday above the new buy point, but quickly moved out of the 5% buy zone, so the stock is no longer a buy at this time. On Tuesday, shares surged 8.55% and are out of the 5% buy zone past the 56.08 buy point. The 5% buy area goes up to 58.88. Late Monday, Cathie Wood's ARK Invest disclosed a new position of 620,300 shares on February 1st for the ARK Next Generation Internet ETF. So one thing I'm noticing now, and one thing I really don't like about this article, is there's not a ton that the analyst said about his personal expert opinion. I was really hoping when we got down to the bottom he would give like many reasons as to why he wanted this stock or why he wanted to buy this stock and reasons why he wouldn't buy this stock, but we really didn't see any of that here, which I kind of find a little odd. So that's the one thing I don't like about this article. That's the one thing I really wish was in here, so I correct. But I would have to guess, based on what he's saying, that he's pretty bullish on it because he gives a lot about the fundamentals. Obviously, the technical analysis point he throws in there, which I personally don't believe is that important. But I mean, other than that, I feel like he talked pretty bullishly about this company, especially the fact that Cathie Wood's buying it. I mean, at ARK Invest, I really think he's pretty bullish on it. And personally, this is a stock I really want to get involved with. This is a stock I really, really want to add to my portfolio. I see a really big future for this stock. I see the vision for this company. I love everything about it. I really like Jason Robbins, but the problem is I need the valuation to come down a little bit before I do that. And I don't want to buy a company that's overvalued. And some people, they just get into a stock because, you know, they hear me talk about it or they hear someone else talk about it. I want to get in a stock at a fair price. I want to buy a good company at a fair price or a great company at an undervalued price. That's what I really want to buy. It's like going to the grocery store. Like when you go to, say, Dave's and it's like you see chicken or meat or something that's overpriced, you're like, I don't want to buy that. You'll just take your business elsewhere. It's the same thing with stocks. If I really like this company, but the problem is the company is overvalued, I'll just go to a different grocery store. I'll just go to a different company. I'll just buy a different stock that's undervalued where I can get a better deal and I'll have a better risk reward at the end of the day. That's my 2 cents on it. Like I said, guys, I really want to get involved with this stock. I can't just yet. I need that valuation to come down to around $40 a share. That's when I really start. This would really start to get interesting to me, and that's when I really want to start buying again. But as to this article, final thoughts, I liked it. I thought he pointed out some great points about the fundamentals. I would like an expert opinion from him, but obviously the technical analysis I think is BS, as I usually do. Other than that, I thought it was a pretty decent, pretty well-written article in my personal opinion. Anyway guys, in saying that, that's gonna be it for this video. Thank you so much for watching. I really appreciate it. If you did get some value out of it, if you did like me going through this article and giving some news update about ARK Invest and Draftkings and really everything I talked about, please drop a like on the video. That really does help me out in a massive way, and I really appreciate every single one of you that helped me out like that. Also, remember to subscribe to the channel as well and turn on that notification bell if you want to see more videos like this. Let me know down in the comments what you think of Draftkings, what you think of Cathie Wood, if you think it was smart of her to buy it, do you think she should have waited? All those things, I'd love to hear from you guys in the comments as always. And I'll see you guys in the next video.